Welcome to my channel. Today I would like to introduce you to an upcoming book called Unknown Market Wizards. So Unknown Market Wizards is an upcoming book by Jack Schwager. It's expected to be released around November 2020. Jack Schwager is the author of the infamous book series called Market Wizards. So he has educated and entertained a lot of people over the last 3 decades. His last book on Market Wizards was many years ago, and his interviews are quite lucid and offer a wide range of trader interviews. So this offers a wide range of material for new or experienced traders or investors. So moving on, the market, what is this book about? This book is supposed to be about the best traders you have never heard of. So most likely there will not be any interviews of well-known professional fund managers. And Unknown Market Wizards continues in the 3 decade tradition of the hugely popular Market Wizard series. The twist in this book is that the featured traders are individuals trading their own accounts, and it has achieved these people have achieved performance levels that rival the best professional investors. So there are some clues in the introduction where they talk about certain profiles of the traders. So there is a trader who apparently turned an initial capital of $2,500 to a $50 million corpus, and there is also a trader who achieved an annual return of 337% over 13-year period. So this sounds extremely impressive. And there is also a trader who made tens of millions of dollars using a unique approach that employed neither fundamental nor technical analysis. So it would be very interesting to read this interview as well. And then there are a couple of other details, like there is a former advertising agent executive who used classical chart techniques to achieve a CAGR of 58%, and a promising junior tennis player in the UK who abandoned his quest for professional sporting career for trading, and he has generated a 9-year track record of an average return of about 300%. So, moving on, what was the criteria to be included in this book? The criteria, as per the sources I have read, are as follows. The traders should have preferably a long track record of 10 plus years. So, if the performance is exceptional, Jack Schwager was okay with at least 7 years of data. And traders with very high CAGR or very high return to risk ratio were preferred. Like a ballpark Sharpe ratio would be around about 2. And there is also a benchmark criteria on the benchmark outperformance or alpha. And he was not extremely interested in any traders who specialized in the tail risk strategies, like traders who buy only deep out of the money options, or traders who trade in extremely illiquid stocks or have strategies that work only on illiquid scripts. So he was not interested in that. He wanted mainstream market traders. And then he has also used some criteria like gain to pain ratio, which is the sum of all returns divided by the absolute value of sum of all negative returns. So in essence, this ratio shows the net ratio of net returns to losses incurred in getting those returns. So he is not just worried about returns, but also he is worried about the downside there. Then coming to the actual criteria he has used in this book are for traders to be included in this book are gain to pain ratio of greater than zero point 0.3 for daily data and greater than 2 for monthly data, and Sortino ratio divided by square root 2 of 2 to be greater than 2. So it's more like an adjusted Sortino ratio. So Sortino ratio, for many of you who may know Sharpe ratio, it's a variation of Sharpe ratio, but this penalizes only the downside volatility. So upside volatility is not penalized in Sortino ratio. And then he also uses a fund feeder score, which is a proprietary score of his firm called Fund Seeder. That had to be a minimum of 60, but preferably greater than 75. And the average annual CAGR, he's not too keen on absolute CAGR percentage, but he also considers other variables like gain to pain ratio or Sortino ratio. So conclusion, so I would say that this book would be of great inspiration to people who want to be financially independent by trading their own accounts. And this book could also possibly introduce some newer techniques or it could introduce some new edge of a few traders, as computing power has vastly improved since the last market wizard book was published. There is bound to be survivorship bias in these examples, and there are many people who see these types of books with skeptic eyes, especially the performance returns. However, one thing to note is the criteria doesn't just look at plain vanilla CAGR percent. It also looks at Sortino ratio and various other metrics such as gain to pain ratio, which makes it really difficult to game any performance returns. For instance, I read about this on a blog. Apparently, theoretically, a person could open 10 different accounts, split $50,000 in those 10 different accounts into $5,000 each, and then just trade randomly and just cherry pick the account which performs the best and show the CAGR return. But in that case, where there is random CAGR, high CAGR, there is bound to be not so great Sortino ratio or Sharp ratio. So that is something which I thought myself. So, but I would be awaiting this book keenly, and I would want to read this book as soon as it is released. Thank you.